You guys, back with another video, and today we're going to be talking about 7 of the best ways to invest $5,000. Now, instead of reading this article, I put it all into slides. 7 ways to invest your money. And just a heads up, this is going to be a little longer of a video than what I'm usually posting, from like a 1 or 2. So if you like this type of long form, just let me know so I can keep on doing it. It's just with more information. But let's start off with the first one. The first one, of course, is the S&P 500 index funds. So it's invests in 500 large U.S. companies across diverse sectors. An example is mutual funds, EFTs that track the 500. But now let's go into the pros and cons. So the pros are broad market exposure, lower risks due to diversification, typically lower fees. The cons are limited to large cap U.S. companies. You may miss out on high growth opportunities in small cap or international markets. And this is best for long-term investors seeking stable growth and low volatility. Number 2, the NASDAQ 100 Index ETFs. So these focus on the 100 of the largest non-financial companies on the NASDAQ. So examples are Invesco QQQ, which includes major tech companies such as Apple, Amazon, and Microsoft. So the pros and cons. Pros, focus on high growth tech companies, potential for high returns. And the cons are higher volatility, concentrated in a specific sector, which is technology. Now, who is this best for? Investors comfortable with high risk and seeking growth in the tech sector. Number 3, sector ETFs. Target specific sectors of the market. An example would be a real estate select sector fund, XLRE. This is for real estate, or utilities, XLU. So the pros for this one is targeted exposure to specific market sectors allows for strategic bets. The cons, however, are higher risk due to the lack of diversification, and this is best for investors with strong convictions about specific sectors or looking to diversify within their overall portfolio. The next one, which I don't have the number, which is the fourth one, thematic ETFs. Invest in companies aligned with specific trends or themes. Examples are AIQ, or Global and Artificial Intelligence Technology. For AI technologies, Global and Cybersecurity ETF, BUG, for cybersecurity firms. So the pros are investment in emerging trends in innovative sectors, potential for high growth, while the cons are high risk and maybe more volatile, speculative. Best for investors willing to take a high risk for the potential of high returns in niche markets. Now, usually with these ones, people don't really go for these ones, to be honest. There is good volume, but everyone usually sticks to a lot of the other ones that I'm talking about. This, I believe, is number 5. So it's called ESG ETFs. So these focus on companies with strong environmental, social, and government practices. An example would be the Vanguard ESG US stock, ESGV, which includes companies involved in controversial activities like tobacco or fossil fuels. So the pros, it align investments with personal values, focus on sustainable and ethical companies. Now the cons may exclude high-performing sectors, potentially low returns. And this is best for socially conscious investors who prioritize ethical and sustainable practices. Again, it's another one of those ones that very few people that I know or see are invested in these ones. So that is my opinion only. The next one, this would be my 6th one, is the BDCs. And these provide capital to small and medium-sized companies, or businesses, Examples would be Ares Capital Group, Capital Corp, and Blackstone Secured Lending Fund. And these are known for high dividend yields. High dividend yields, potential for income generation, which is the pros, and the cons are higher risk, specifically for economic downturns, less liquid. So this is best for income-focused investors comfortable with higher risk. Honestly, overall, dividends are a good one to add to your portfolio. As you see, always people talking about is dividends. Those are a good one to look at, and if you want me to, I can make another video on some good ones to invest in. But just let me know in the comments. So the last one is, of course, REITs, or Real Estate Investment Trust. That's the way I say it. Other people said it other ways. So Don't get too crazy on me. It invests in various real estate sectors. An example would be a public storage, PSA for self-storage facilities, or digital realty trust, DLR, for data centers. There's other ones that I forgot to put in here that I should have, but you could just do a quick Google search, but these are the only ones that I found within the article that I read. I wouldn't have picked these ones, but they did for a reason. So the pros are regular income through dividends, exposure to real estate, and the cons are sensitive to interest rate changes, specific sector risk. And this is best for investors seeking income and diversification through real estate exposure. And this honestly concludes the video. Please let me know which one either you're going to go with. If you have any questions, just please let me know in the comments and I'll answer them. Or if you want to make another video like this or similar, just let me know. Other than that, hope to see you guys in the next